Good morning, good afternoon, good evening to everyone today. Welcome to this, I think, very exciting webinar from Thomas Murray, ISSA, SWIFT, and DTCC. Firstly, I'd like to wish a warm welcome to everyone who has registered to attend this webinar, and a huge thanks for taking time out of your day. I think it's going to be worth every second of your time, whether you're a CISO or a cyber risk professional, or whether you are a CEO, board member, or risk professional, or indeed anyone else exposed to the current threat landscape in capital markets. Our topic today is cyber risk in capital markets. How can banks and FMIs stay ahead of the threats? And we're very grateful to our expert panel in front of us for joining us, as they really are leaders in their respective roles in the industry. Before I ask the panel to introduce themselves, I just want to comment on the extraordinary interest we've seen in the number and actually the diversity of people who have been signing up for today's session, which I think reflects the huge interest and critical importance of this topic in 2022 across sectors, across geographies, across roles. It's really interesting. We've had hundreds of sign-ups for people to join this session. About half of those are from the banking world, about half of those are from the stock exchanges, the central banks, payment systems, CSDs, as well as a good number of governments, treasuries, regulators, and even investment managers and other sectors as well. I think just for our attendees' interest, and actually that of the panel as well, about half of the attendees today are cyber professionals, large number of CISOs among them. We've also got a large number of senior management, so that is non-InfoSec senior management, board members, risk professionals as well. So I think the makeup of our panel today is reflecting that beautifully, and I think we're going to add a lot of value, hopefully, to both InfoSec as well as non-cyber specialist attendees who have an interest and some responsibility for either oversight, enforcement, or compliance regarding information security. So finally, we really are beaming this across the world. We've got attendees from every continent, from well over 50 countries globally. It's a real privilege to be with you all, so thank you very much. So I'd like to say a huge thanks to our panel for joining us today. I'd like to ask them to introduce themselves, their roles, their organizations, perhaps for 30 seconds to a minute each, so we can get to know your areas of expertise and experience. So I'd like to start with Colin.
Colin Parry. I am the CEO of ISSA, which is the International Security Services Association. We are a trade association consisting of CSDs, banks, custodians, technology firms as well. And we're really covering, probably uniquely, the front-to-back elements of the security services lifecycle. And again, it's truly global. We don't have anybody from Antarctica, but we cover the rest of the continents. And we've written numerous papers, particularly with Jason and Frank's help, on cybersecurity and the best practices thereof.
Thanks very much, Colin. Thank you very much for joining us. Can we go to Jim?
Thanks, Rory. So I'm Jim Micklethwaite. I'm Director of Operations at Thomas Murray. We specialise in the post-trade world, and we monitor and assess custodian banks and financial market infrastructures for our banking clients. And we're interested in cybersecurity because we believe that this is the next big area of risk in the banking world and FMI world, and you know, this is a critical issue we have to monitor going forward for our clients. So that is why we're pleased to join this today, and indeed we'll be looking at cybersecurity very closely for all of our clients going forward.
Great, thanks for joining, Jim. And can we, Frank, could you introduce yourself?
Sure. Frank Versmessen. I'm heading the Customer and Partner Security and Resilience department here at SWIFT. SWIFT, I guess I don't need to introduce the international messaging network. One statistic I always find interesting to bring up in a panel which is closer to securities and payments is that over 50% of the SWIFT traffic today is securities related, right? Securities or securities related. So more than payments.
Great, and thank you, Frank. And Jason, please.
Jason Harrell. I'm the head of our external engagements group, where we work on policy and advocacy for cybersecurity, resilience, new and emerging technology and financial digitalization. For those who aren't familiar with DTCC, we are a clearing and settlement business within the United States. We also operate derivatives reporting services across the globe. We operate the world's largest central security depository in our DTC business, and therefore we play a huge role in both the U.S. and global markets.
Great, thanks, Jason. Well, thank you all, and thank you all. It's a great pleasure and privilege to have you all on the panel today. Finally, a bit of housekeeping before we start the session. This session is going to last about 45 minutes. As we go along, I'd like to invite all of our attendees to add their questions in the Q&A section, which might not be obvious, but it's the question mark in the bottom right of your screen. Please put your questions in there, and please indicate if it's a question for a specific panelist, so we can put it to the right panelist, and we'll try to get through all of your questions at the end of the session, if that's okay, in the last 15 minutes, taking us up to the full hour. But without further ado, let's start the discussion with our first topic. And Jason, we're going to start with you. And I'd like to say, I mean, what are you seeing as the biggest emerging threats in capital markets today, and what trends are you observing as market participants respond to the threat landscape? So Jason, can we start with you, please?
Yeah, I mean, so I'll give three emerging threats that I think, well, some of them have arrived, some of them I think are going to be emerging. So, starting with the supply chain attacks, and I believe the reason for that is simply because as financial institutions continue to strengthen their controls and their ability to monitor and protect themselves against cybersecurity threats, these threats now turn to the third parties, first because they have some level of reach into financial institutions. Second of all, they may not be as well guarded as what we're required to do within financial institutions. And then I think lastly, because the ability to potentially breach numerous financial institutions by just doing a single breach with an important third party. I think we're also going to start seeing a rise in new and emerging technology vulnerabilities and the threats coming from there, whether that be cloud-based attacks or crypto and blockchain. Again, as financial institutions use cloud more and more and rely on cloud vendors, you'll naturally see a rise of attempts to breach those networks in order to get access to the information that sits there. I think from a crypto blockchain, we're already seeing a number of these attacks, but that's pretty simple, right? You want to get the money, and if you can get access to some crypto, then of course that tends to be the way like cyber criminals and others looking for financial gain go. And then I think Internet of Things, and the reason I say Internet of Things is because I feel as though as the workplace becomes more diverse, we have all of these different, everything is internet enabled, even things that you go, well, why does that need to be internet enabled, like your refrigerator? But if people are working from home, they have their devices at home, they're outside of the protections that are provided by the corporate network, and these Internet of Things devices, if able to be taken advantage of, can provide more direct access to workstations that then connect to the overall corporate network. So, I see those as three areas of emerging risk that as cyber professionals will have to think about. I think when you talk about response trends, I see a move to operational resilience. We're taking the position that breaches are going to be inevitable. I mean, at this point, I think we've just moved into that space, and so if the breaches are going to be inevitable, then what are financial institutions doing to build the capabilities for a faster recovery. And I think that is where a lot of the focus is right now. I think some other response trends we're seeing is enhancing our information sharing channels, both between financial institutions and between our supervisors and regulators. And then there's an increased focus on third-party risk management and supply chain risk management.
Yeah. Well, no, I mean, thanks, Jason. That's fascinating. I think certainly at Thomas Murray, we're seeing a lot of the banks migrating towards the cloud. And I think, I mean, all your first 3 points around the growing risk is really around that kind of growing attack surface migrating to the cloud, the supply chain, Internet of Things. So, I mean, that's fascinating. Thank you. So Frank, if we could go to you next from a sort of SWIFT perspective, and I suppose capital markets and payments more broadly, what's your perspective on the emerging threats and the trends in response?
Thank you, Roland. I was thinking when I was listening to Jason. Well, first of all, I agree, of course, with every point. I mean, those are the top numbers, right? It's the supply chain, it's cloud and IoT for sure as well. I would want to take a bit of a step back as well in that respect, that some capital market players in the past have also said, like, why is this a risk for us? Or are you sure we should be considered as being risky? And I think it became a lot more clear with the latest geopolitical situation as well, that disruption of systems, market disruptions as a whole, are serious, or it's not just your electricity infrastructure or any other utility. I mean, many of the market infrastructures as part of the financial space are also considered as to be very vulnerable and as being seen as a critical part of their markets. And if they would be disrupted, that would disrupt their whole markets. So just from we know that there are players, it's not just little hackers there, it's actually nation states that are very active as far as the landscape is concerned, and particularly from those corners of the world, we should be extremely careful to dismiss the idea of not being a target, specifically on the market infrastructure side. Having said that as well, I mean, capital markets, that's not just about bonds and about equities. I mean, in every flow there's a payment aspect as well. And like Jason was saying, right, I mean, if you want to go after assets, the assets of a currency is very easy to go after, and that we have seen over the last few years, that there have been attacks there have been possible. I think they were very easy. Hopefully I can come back a bit later on in this webinar about what we've been doing to ensure that the levels of cybersecurity have been going up. But I think, like I said, I mean, there are payment flows as well there, and they need to be carefully protected. As far as strengths that I see, if I want to say something different than what Jason was saying, I think more and more market players see this as a top risk. It's no longer something that is being discussed in the fringes. It's actually at board level, so it's being taken very seriously, and good so as well. And we see that also from the regulators as well, of course. I think in markets where capital markets have been developed already for a very long time, you can see regulators were already very concerned. We now also see that in other markets, and there's numerous examples where they are stepping up, and where we see more activity from that side. So that's definitely a trend that we have been witnessing.
No, thanks, Frank. I mean, I think it's actually a very good point to make up front, isn't it, about the capital markets and the threat of disruption to systems, to markets is a critical risk. I mean, about half of our attendees today are from the CSDs and the exchanges from about 40, 50 different markets globally. So I think that's a great point to make up front. I mean, quickly, Frank, I mean, is this seen as a top risk, do you think, in the boards of the market infrastructures as much as it is in the banks?
Well, I'm not sure I'm the right person to answer. I can tell you for sure that on the bank side, Actually, no. I mean, I can say something about that. If we look at the outcome of our customer security program, where we're looking at compliance numbers, so we can look at compliance by market infrastructures, by banks, by custodians. Custodians typically in the securities world have shown a very, very high levels of compliance. They are taking it extremely serious. Also working together with external experts, and that can just not come from their IT departments or compliance departments. That must come from the top. So I think the awareness is there, but yeah, it needs to also be across the market.
Great. Well, thanks. And speaking of custodians, I mean, Colin, can we go to you from the bank's perspective? I mean, what risks are faced by security services providers today? What are you hearing from them, and what trends are you seeing in their response?
I'll just build on Frank's point. Actually, we obviously had a cyber stream working group set up. It is probably the most common conversation I have with people who are joining ISSA is, well, why haven't you got a cyber group going now? And I said, we have, but we're just waiting for the next topic, and that may be quantum, and I think we're going to carry on and talk about technologies later. But that question gets asked to me by custodians and the central banks and the CSD. So I think it is something that everybody's aware of, and it's top priority. If I look at where I see the threats, I'm an old ops guy, right? And so I look at surface area. And the surface area that we've exposed has been huge. And the question I'd ask for everybody on this call actually is the router that they may be using to dial in here today, did they change the password from the one that came in when it was in the box? Right? Did you take that one step to help the system security and reduce the surface area? You know, the unwitting insider within a firm, which is one of the actors we highlighted in the cyber paper, is probably one of the most dangerous, because they allow access into the network, and you know, just changing the password does help. It seems ridiculous if people don't, but I would imagine there's a few people thinking whether they have or not as we have this conversation. The second area I'd say is again to follow up, I guess, with Frank and Jason, which is I think it's very important that people look at what's the rationale for the attack, what is causing that attack, and therefore which vector is it going to come through. So I was talking to one of the emerging market infrastructures the other day, and they have very resilient setup. They've got spare generators, they've got 2 data centers, they're well spread apart, etc. The thing that they weren't expecting was attack on the telecoms infrastructure and the taking out of a telecoms central office, right, which had both Wi-Fi and hardwire through it. And so if you think about how you could disrupt a financial market, that is actually a third party which you don't really think about. And again, I think it's worthwhile looking at the whole chain of everything involved within the infrastructure or the custodian, and making sure you've got resilience, not only in the obvious areas, but also in the areas which you may take for granted, such as telecoms. And I'll leave it there.
No, I mean, that's fascinating. I think we know there was a very high profile telecoms attack in Australia recently, wasn't there? Certainly top of the news agenda there. Thank you, John. And Jim, if we could just go to you. I mean, obviously, from a Thomas Murray perspective, you're speaking to banks and FMIs all the time, as are the rest of our panelists, about their sort of risk, security, best practice. So what threats are you seeing, and how are the global banks, the local markets, whichever angle you think interesting, responding?
Well, I mean, I think I'd definitely echo my other panelists' views. Supply chain is obviously the product of the very highly interconnected environment of most capital markets, both between different actors within the market, and across geographies. So the potential for contamination is inbuilt into the nature of the ecosystem, and certainly within jurisdictions. I think it's clear our analysis would suggest that the banks are much better prepared and resourced, and certainly able to deal with threats much more readily than the financial market infrastructures within jurisdictions. And really, it's about who is the weakest link, and where are the gaps that would allow an attack to come in and then probably disrupt the systems to the extent that markets would have to close. I mean, if the CSD was attacked and was taken down, there's no way that trading would continue in the market, and then you really are into serious consequences. And then in terms of recovery, certainly again, I wouldn't be so sure that the FMIs particularly have the robust plans and resources to be able to carry on operations in the event of an attack. So I see the threat certainly in terms of the weakest links being some of the FMIs, certainly in the emerging markets. And as Jason says, I think you've got to plan that it's inevitable, and it's not about necessarily kind of your defenses and protecting the castle. It's about how are you going to cope with it when it does happen, because it will happen at some point in time. That's for sure.
Yeah, no, thanks, Jim. And I think it's a great point with the smaller organizations. The liquidity, the budget for instant response is, I suppose, another concern. But no, thank you all for that. I think our next topic.
Sorry, can I just, because I can't help myself, I have to interrupt you.
Go on.
So I think the point's very valid, but I also think one of the things that the regulators may be doing unwittingly is force people to recover too fast. So I actually think that is probably one of the biggest threats that is out there. People have got a 2-hour recovery time, right? And you're looking over your shoulder about that. And some of these attacks have been in preparation for months, if not years. And if you're rushing, do you cause more trouble than taking your time? And the 2-hour recovery, to my mind, is arbitrary and maybe unhelpful, and actually cause more problems than it solves. But that's just my view.
Well, it's very important. I don't know if any of the other panel want to respond to that before we move on.
Yeah, I mean, I'm with Colin there. I think the 2-hour recovery really stemmed from physical attacks, and so after numerous primary data centers went down, it was like, okay, well, if you build another data center, can you transfer the operations to the secondary data center in order to meet this 2-hour recovery? But cyber is a different beast. A lot of these attacks, and I'll talk more about them in a upcoming questions. But a lot of these attacks, I put it to financial authorities like this: if the NSA broke into your systems and did something malicious to those systems, how long do you think it would take you as an organization, number one, to figure out what was going on, number two, to get the NSA out of your systems, and then number three, be able to restore them back and make them operational, and then number four, give the rest of the financial markets the comfort that everything is free and clear. And if you look at it in that sense, and you go, okay, 2 hours. Is that something that is going to be best for the markets, or should there be rapid but safe, making sure that you have a safe recovery of the financial markets so that you maintain the safety and soundness of the system? isn't that what we're all trying to achieve?
Okay, well, that's very interesting. I'm going to move on to the next topic in the interest of time, which is a bit of a deeper dive into the sort of technologies, the frameworks, the regulations out there. So, I mean, I'm going to start with Colin. I mean, so what changes are you seeing in the technology and the frameworks and the regulation that are driving the industry forward at this time? Obviously, ISSA has a huge program of engagement papers it publishes, guidance for banks. So in that context, what are you seeing in terms of that technological and regulatory change?
So not a massive change over the last 2 years. So we wrote the last paper, I think, 2021, beginning of 2021, and not a huge amount has changed from either the regulatory space or what people are expecting. The one that we've got on our radar, which is probably worth thinking about, and actually Jason's team at DTCC wrote a great paper which I put on our LinkedIn page the other day, is around quantum computing and the impact that's going to have on our present security. And what I hadn't quite understood is actually, if people are saving data sets now and are in your systems, and those data sets are encrypted using the present encryption technology, that say quantum becomes more mainstream in 5 years' time, if they've saved that data for those 5 years, they'll be able to unencrypt it. And that was a realization which I took from the DTCC paper, but I hadn't considered before. And so that actually makes me think that the threat coming from quantum is probably something that people need to have an answer for now and have an understanding about what they're doing in preparation, let alone having the NIST approved encryption methodologies which are sort of being rolled out at the moment. It's like, well, what can you do to secure your historic data? And that I think is fascinating, actually. And may cause us to write a paper, but I'm not sure we'll write one better than the DTCC one, so maybe we'll wait a bit.
Oh, we'll look forward to that. Jason, if I can move on to you from your, I think, public policy focus particularly, or any angle you'd like to take on that question. So what technologies, frameworks, regulations?
Yeah, I wanted to go back to something that both Frank and Colin said earlier. I think when it comes to security servicers and capital markets participants, one of the things that we have to realize is not that all attacks aren't about money. Sometimes it's about displaying capabilities, and sometimes you get the feedback from security servicers or others saying, well, we don't hold the money, so there's nothing for people to steal here. And from a nation state perspective, it may not always be about stealing money. It might be able to demonstrate the capability of disrupting the financial markets. And that's why I think there's a lot of focus, from the regulatory environment to, help shore up some of the potential risks that may exist where we have concentration of services for the financial markets. But there's been a lot of financial authority activity that we've seen over the last 5 years, especially focused on resilience, focused on third-party risk management, and focused on cyber incident reporting. So you had the UK coming out, UK authorities with their operational resilience rulemaking. You have the Basel Committee on Banking Supervision that put out principles on operational resilience. You have the Monetary Authority of Singapore with their business continuity management guidelines, which are really focused on resilience. And you've had the HKMA actually put together an operational resilience supervisory policy manual where they'll be also looking at this. So I think we're going to continue to see more rulemaking and more activity in this space. And so it's developing, but it's developing very quickly.
Great, thanks, Jason. Yeah, Jim, if we could go to you quickly.
Yeah, I think probably the other one to think about is also, as has been talked about earlier, crypto and digital. And obviously, if we are moving towards more of a digital tokenized securities environment in the future. The regulations really need to start aligning in terms of what market best practices are in relation to the digital asset service providers, digital exchanges, and obviously we've got the MiCA regulation in Europe, which has just been finalized in terms of the text. But we are still seeing, and we're trying to look at obviously digital custodians as the next area that we'll be looking to monitor for our clients. And there's still a lot of emerging practices across the industry. That there aren't really the standards that are in place yet, and that's where we will probably be looking for more leadership from the regulators in the coming years, and alignment across jurisdictions.
And Jim, the ISSA DLT working group is just about to start a paper with GBBC Digital Finance on digital custody and best practices, because we see it as a key area to focus on for our members, and also for some of the crypto firms which are around the side. And there we're going to compare historic custody versus digital custody. And one of the weaknesses, which I think we've seen a number of cyber instances, is in effectively the bridges, right? So if you think about the Euroclear Clearstream bridge, that's quite robust. But some of these bridges between the exchanges, particularly within the crypto space, they seem to be open to abuse and poorly designed, and the system security is inadequate.
Yeah, I'd agree. And the other area I think is we see a kind of parallel tension between sort of asset safety and operational efficiency in terms of the way that the wallets are constructed, and it's exactly the same kind of conundrum that we've had in classic custody over accounting standards versus operational efficiency. And I just feel that history is repeating itself at the moment.
Well, it is. On that note, I just lastly on this topic, we'll go to Frank, please. I think you mentioned the SWIFT customer security program already, but I think that's obviously a very significant framework in the space. But yeah, what are your opinions?
Yeah, thank you for bringing me in on this, Roland. And by the way, I could say a lot more about the 2 hours as well, and about the quantum. On quantum, SWIFT obviously is also looking into that, and we hope to issue some more information about that as well, how we see how this will evolve. And of course, we're looking at the current work that's being done there in the standardization space as well. As far as framework is concerned, so indeed, part of the customer security program, the core of it is really the customer security control framework, which is very, very similar to, or loosely based, if you like, on NIST, on PCI DSS, and on ISO 27000. We really have seen the framework from the watershed moment with Bangladesh back in 2016 evolving to a very mature security framework, which is now very much implemented into up to 13,000 BICs on the SWIFT network. So it's widely recognized as it has become very mature. That is, that we have been promoting some of the earlier advisory controls to mandatory controls now as well. We're now, I think, at a level where we'll see less of that, but more specific changes will be made, and those will be linked to excuse me, to the technology evolution that we see, or indeed threat landscape evolution. Jason was mentioning the risk around cloud. Well, yes, for sure, one of the controls is all about critical activity outsourcing. That is a crucial one that we'll have to zoom in more, and we'll have to make more and more institutions aware that that is a critical one to look after. Another development as far as technology is concerned is everything around, it's been going on already for a while, but we see it now more and more, is the use of APIs. That particular way of communicating, that also needs to be properly secure and so forth. So we see some further changes in the security framework itself, but they're not going to be as big fundamental changes anymore, just because it became quite mature. I think as far as the other pieces of the program is concerned, there are still some big changes that we do see. We did introduce a mandatory assessment last year, and that was really important, because in addition to everybody who's looking at cybersecurity, we wanted to have somebody looking over their shoulder. Could be an internal auditor, could be an external party. A lot of the firms, about 50% of the firms actually did go for that external assessment. And that's not because they didn't have the internal expertise or because they thought it was better. It's just, it brought in some external pair of eyes that gave them insights on things they didn't see themselves. And so we hear from the membership that, and that includes custodians and market infrastructures next to the banks and corporates, that they actually learn a lot from that independent assessment period. And a final thing that we still see changing a lot, that is the supervisor engagement. We haven't talked about that so far, but I think well, I'm not sure if actually most people know, but the supervisors, the financial supervisors, are playing a very important role as part of the customer security program. In that respect, that from day one, they felt very concerned about what's happening. Back in 2016, of course, they were part of the mix, and they said, gee, what happens if this happens in my market? What happens to me? So how can I quickly ensure that the right things are being done here as far as cybersecurity is concerned with my local banks and securities players and capital market players? And they really said, okay, they jumped on the program, and they said, but we also want to see the results. So can we get the results, please? So they can get the results, and this is something they can see how their entities, their supervisees are doing. They're asking more and more information. They're asking for the details of the information as well. They do that directly, of course, with the supervisees. So the change that I'm seeing, that I wanted to bring on, is that we see more and more supervisors that are being very active and making use of this information. And maybe final point is that the program is just not about ensuring that we have the right levels of cybersecurity hygiene everywhere. It's also about giving parties the ability to look at each other and make use of that information as part of their risk management processes. So that means that we see more and more large institutions looking at all their counterparties, not just looking at markets, not looking at just AML practice and those kind of things, but they're now also looking at, okay, how have you implemented your cyber security risks? What did you do to mitigate them, so forth? What is your status? And they make this part of their overall risk management processes. So that's something that we see is taking the counterparty risk, cyber risk, much more part of the mix when they are doing their due diligence on an annual basis.
No, thank you so much for taking us through that development as well. That's really fascinating, Frank. I think we're going to move on to the next topic, which hopefully, I think, bearing in mind about half of our attendees are senior management, risk, non-infosec, but have some kind of presumably compliance, oversight, enforcement responsibility. We're going to ask a question really for them, which is, starting with Jim, from your sort of risk perspective, how can non-expert or expert cyber expert management boards, regulators hold infosec teams to account or scrutinize them or sort of perform proper oversight, in your opinion?
I think Frank's just kind of introduced this. I think it all comes down to making sure that cyber is incorporated into the organization's risk control framework. And, the senior managers, the risk managers at the top, who are setting the boundaries, setting the risk appetites, understanding what kind of exposures they would tolerate. They need to be connected in a very kind of practical way with the IT cybersecurity personnel who actually understand the nitty-gritty of the exposures that they're running. And these are two very distinct groups of people that don't necessarily speak the same language, and you almost need a kind of translator in the middle, whether that's a CISO or we're starting to see some organizations having BSOs, kind of business analysts, sitting in the middle, who are able to kind of make that translation. And once you can have a kind of common understanding of what the threats are, what the tolerance limits are, what the controls that are in place within the framework that are able to mitigate those risks, then you can probably have a very down-to-earth conversation. This is our risk. This is the dollar value that's attached to it. How are we going to manage that? How are we going to finance that if we are attacked and inevitably there are losses? Is it borne by the organization? Are you taking cyber insurance? Are you outsourcing that? Are you managing it in some other way? So it comes down, I think, to communication and having a kind of single joined up plan that's embedded within the control framework that everybody can understand and buy into. And then you've actually got a proper plan as to how you're going to be able to deal with an attack.
Yeah, so the onus there is on information security professionals to be able to quantify, articulate in sort of plain language and report on sometimes very complex risks. No, thank you, Jim. I think, Frank, obviously you've touched on this already, but do you have anything more to add on this topic about?
Well, I mean, if you look, maybe two things. If you look at a typical cybersecurity framework implementation, you'll have the three aspects, right? You have the protection bit, you'll have the detection bit, and you'll have the what are you going to do to make sure that everything is cleaned up quickly after a disruption and so forth. So, I mean, back to Jim's point, indeed, you as a board member, you're going to ask about, okay, which are the policies that you have in place? What are procedures? Can you show me that you adhere to frameworks? So it's a big questions, right? I mean, if you ask about detection, I mean, which are the breaches that you see? If you get an answer, we didn't get any breaches, then they're wrong. I mean, back to Jason's point. I mean, and I think Jim mentioned this as well. We have to move to an assume breach mentality. It's gonna happen. It's not if, it's when, right? So so of course you have been, you have, but you were able to mitigate it. You were able to slay off the attack forcefully. It was a phishing attack or something like that. So what have you seen, and how did you react, and what are the measures that you have in place? I think the one thing that I would add is you want to have an other party. So you see those, yes, but you want to have your audit department, back to the assessment, right? You want to have an independent party checking on that, making sure that yes, you've done all the right things, that you've have them in place, that they're probably have a second party look at that, and that once you have the mitigations in place, that you say, okay, how are you monitoring your controls, right? It's a good thing to have them in place, but how you're monitoring as well. I think that's definitely one of the which I would have as a board member. I would say that's critical. Show me how you're doing that.
Thank you. Yeah, I'd say just before I go to Jason on this, I'd say if any of the panelists, any of the attendees have any questions, please do put them into the Q&A box. We promise we'll try to get round to them all. But yeah, Jason, what's your perspective on this?
I guess I'll just add a couple of things to what Jim and Frank have said. First, I would stress to the boards and to management and the regulators that, when we're talking about resilience, it's a lot bigger than just the InfoSec or the IT teams or the business continuity teams. There's a whole of business activity, and what are the businesses also doing to build capabilities to be more resilient. I guess you would want to understand, does your senior management, are they even aware of their requirements for operational resilience, and have an updated framework for how they're actually managing that within their institutions? They would want to know about the capabilities and testing that the institution conducts to improve their operational resilience. I think that's really important and key. And then understanding how all of those activities map back to their regulatory and client obligations. Are there any gaps, any planned remediations that the institution is taking to help further align their operations with those expectations?
No, thanks, Jason. And Colin, finally, I mean, a lot of your members are attending the webinar. So what would be your sort of message to them, to the senior?
No, I think the team have covered it very adequately. The one element which I don't think we've talked about, which maybe we should, is actually having third parties trying to break in. So I agree exactly with the whole idea of having your internal audit and the risk function look at it, but actually having somebody looking from the outside and trying to break in may show some holes which you hadn't realised. So that's the only thing I'd add.
That's very helpful, thanks. So we'll go to our last question, and I'd ask that the answers are quite short because then we'll jump straight into the Q&A. But in your opinion, what can our attendees do to build security, to build resilience today? Obviously, we've covered this to some extent, but I suppose what would be your top tips for the attendees? And we'll start with Frank, if that's okay. Frank, I think you're
Did you on mute?
I am on mute. Yeah, sorry. So of course we mentioned already, you have to assume the breach mentality. I'll keep it short. I think the only other thing is we need to grow our security culture. I think that's what it's all about, right? And that means from one of these other boutades typically that you say, I mean, we are all one big firewall, right? We are a human firewall. That is where it often comes down to. The soft bit in the whole security shield is very much us humans. So we have to build the security culture. That's what I would say is still crucial in many firms. And I would make that a big point on the agenda.
Security culture. No, that's great. Thank you. And Colin, what's your perspective?
Join the ISSA Operational Resilience Working Group and help us work out what the best practices are so we can turn around to regulators around the world and say, look, this is what good looks like.
Perfect. Absolutely. A call to arms. Jim, how about you?
First of all, I'd say that, there are frameworks out there which are internationally recognized, which people can access freely, which would give any group a really solid starting point in terms of building cyber resilience. So, it is a reasonably expensive business in terms of technology and resources, but in terms of just building understanding and having a plan, there is help out there. And I think I'd also echo what Colin has said in terms of transparency. I mean, this is not an issue to be tackled on your own. This is certainly something that you should be transparent about within your communities, because the information in terms of attack vectors is crucial to understand for everybody. So there's no point in hiding it, because you're just kind of empowering those groups to attack others using the same attack vectors. So I think communication and in the community and transparency.
Thanks, Jim. And Jason, finally to you then on this question.
All right, I'm going to do 5 quick points.
Go on.
First, you need to understand and document your critical business services that your institution provides both to the client and the financial markets. I say second, you would have to document and understand the people, process, technologies, third parties needed to deliver on those services. Then thirdly, I would say conducting scenario testing to understand the impacts of severe but plausible events to those critical business services. 4, I would say you had to build capabilities to mitigate the impacts of those scenarios. And then last but not least, test. Testing helps decrease the operational friction that you may experience within your organization when these events occur, and it increases the muscle memory of the groups that have to respond and react to these types of events.
Great. Well, thank you very much. Thanks, Jason. Thanks, everyone. So that's the end of our the formal questions. I hope that's provided a lot of insight and a lot of help to everyone actually on the session today. Now we've got quite a lot of questions. I'm going to get to them. We might not be able to get to everyone. If we haven't got to your question, you can get in touch with us directly, and we will ship it out to the appropriate panelist. But firstly, I think it's a question we get at Thomas Murray quite a lot. But as a local market infrastructure, how can that infrastructure best demonstrate high security standards. And I suppose, who can I go to first? I suppose Frank on this. So what is the best way, I suppose, to publicly demonstrate as a developing market, I should have said in the question, your high security standards to the world, to global financial markets?
Well, I think if I can, of course, sing the customer security program song again, I think it's a very well thought through, mature, but also very practical way of ensuring that your critical infrastructure is safe, and then you can attest actually by attesting that via the platform that we have. It provides visibility on all network participants that you are indeed safe, or where you still need to work on, and that is information that you can also give directly to your counterparts. So counterparts, you can actually dig into that information and everything. So that is something that they can do via the platforms. I hope that I was answering your question.
No, absolutely. I mean, and just to clarify for those who maybe haven't come across it before, is the program available to all market participants? There's no sort of blockage to entry there.
There's to all Swift users, indeed.
Yeah, Swift users. Yeah. Yeah, fantastic. And I don't know if anyone else wants to pick up on this topic. I'll open it up to the whole panel about demonstrating security, demonstrating resilience as a developing market, local infrastructure.
I would just add, the Basel Committee on banking supervision, and I know it's, banking supervision, but I believe that the principles that they outline for operational resilience can, serve as a framework to demonstrating how your organization is resilient, and how it manages its third-party risk, and how it manages its cyber program. And if you can then demonstrate how you address each of those pillars within that for your organization, or in the way that a security servicer or a CSD or a custodian would, I think that would at least provide you a starting point.
No, thanks, Jason. We've got.
I'll just be incredibly biased and selfish here, Rolly. So we at Thomas Murray are going out to all custodians, all financial market infrastructures, collecting representations around cybersecurity policies and controls, and they will all be in our assessments for our clients, as I mentioned at the beginning. So please respond to them when our analysts are reaching out to you, please.
Exactly, transparency and response rates is the message. We've got quite a few questions about the sort of geopolitical environment, and one specifically for Jim. I mean, I suppose, how is the current geopolitical environment impacted, I suppose, from a Thomas Murray perspective, the assessment frameworks, particularly around that kind of outsourced due diligence agent function?
Sorry, in terms of geopolitical pressures. So, okay, so I mean, certainly in terms of our assessments, we are including country risk elements, which feed in various factors. And then we're also now combining our view on cyber resilience, utilizing our own threat intelligence tool, for which we are monitoring about 3,000 entities. Rolly, you'll probably correct me. So we have seen, obviously, with things going on in the world recently, an awful lot of activity in terms of upgrading protections, in terms of attack surfaces in certain jurisdictions, without naming names. And certainly that is to do with national actors threatening, or at least understanding that they are being threatened, and trying to respond to those. So in terms of our frameworks, we're definitely looking to incorporate more in relation to geopolitical elements, country risk elements into our assessments.
If I quickly may, because I mean, obviously we've seen an impact there as well. I think it's important for people to realize that when they want to ensure that their counterparties in areas where sanctions are lifted against, that they are often hit by all sort of technology suppliers that are no longer able to ensure the right upgrades and whatever. So that is definitely a concern on our side, that if patches would no longer be available for those entities operating those countries, that you might not be able to guarantee that level of security anymore, and they would be exposed to bigger cyber risk. So we are mindful. So, and we have actually insisted on ensuring people that they do their patch management correctly, and that they take into account these difficulties, and that might have an impact on their counterparties.
So it's an incredibly important point to make, actually. No, thank you, Frank. We're going to go to a last, I think what will have to be a quick fire question from each of the panel. But it's, I suppose, what does the panel anticipate will be the biggest challenges in 2023? So it could be the changing threat level, the nature of the threats, the response to the threat. So, I mean, I'll start with Jason around the 2023 biggest challenges. What do you think?
You know, I really think it's going to be the geopolitical environment. We're seeing now with different conflicts or different trade negotiations between nation states, is that the use of cyber and the demonstration of cyber capabilities increases. You know, when you speak about the Russian-Ukraine conflict, the one thing that has probably not been as publicized in that conflict is the amount of cyber activity that is going on between you know, the nation states of Russia and Ukraine during the time of this conflict. So I see you know, the nation state activity and capabilities just being more honed as we go into 2023.
Great, thank you. And Jim, if we go to you quickly.
I'd also agree about the nation state risk, certainly. I'd also say maybe not necessarily in the 12 months, but certainly in the short term. The value of data in financial services is you know, exploding at the moment, and a lot of the organizations are trying to leverage data you know, much more in their systems for their clients, and therefore the value of that data is just rising exponentially. So data in the financial services industry is a prime commodity, and therefore I think a prime target going forward.
And Colin, and then Frank, please.
I'm going to go for crypto. Given the crypto winter, I think some of the firms which are involved are cutting costs, and you cut costs to your peril in the land of cyber and cyber resilience. So I think we're going to see some of that coming through as well.
Threat from crypto. And Frank, how about you? The biggest threats 2023.
Well, I'll end where we began, and this is purely coincidental, but I'll take Jason's very first point, supply chain. I think the supply chain risk is a risk that we, just to be different, because I think geopolitical is indeed probably the highest, but supply chain risk, we as an industry, right, as a financial community, I don't think have already found the right and complete answer to face off as far as supply chain risk is concerned. And if we were able to get together and think about a way whereby we mutually can help each other to protect each other from all the many suppliers out there, the many development chains out there that are one way or the other are going to infiltrate our software base, that would be fantastic. I don't think we've been sufficiently already awake about that risk. I think there's probably another big crisis, another solar winds needs to pop up in the financial world. But I think if that would be appearing, I think that's the one that we really need to think about harder and see how, as a community, we can address that one.
Well, I think threat intelligence sharing and those communities is another whole topic. We're going to have another session on all of this, I'm sure, one day soon. But look, that's all we've got time for. I want to thank all of our panelists. Thank you for your expert insight. Thank you for joining us today. All of the attendees, if you had to run away to meetings, thank you for joining. Those who are still here, thank you for sticking with us. We will be sending out a recording of this webinar to all of you. So if any of your colleagues or contacts have missed this and you think they'd be interested, please do forward that on. We'll include an email address you can contact us on in that email, so that if you've got any further questions, since we've run out of time here for our panelists, you can get in touch and let our panelists know your thoughts or ask their opinions. And yeah, finally, just thank you very much all again. I hope you found this insightful, and hope to see you all again soon.